580.
Ding dong.
Ding dong. That's what we're missing in the intro. Our little ding dong.
We were singing an intro for ourselves downstairs, just trying it out. Yeah, not so good.
No.
Not so good.
Not so good. It was funny, but not so good.
So Dora's in for Paul.
Yes.
Hello.
And you might be in a few weeks. I hope you don't have any vacations planned, because I happen to see Paul, of course, is posting all these videos and pictures. And the last one that I saw was the one where it actually, the name of the boat, and he's on the SS Minnow. So I'm thinking we're not going to see Paul for a while. Yeah.
Self-titled boat.
You know, he said he got a great deal. Now we know why he got a great deal. SS Minnow. Doesn't buy breakfast.
Is he going for a
cheapskate
3-hour
on
tour?
Yeah,
Yeah.
he's going on a 3-hour tour. Yep.
All right, here we go. Hey, it's the end of January already.
It is the end of January. It
When
is the end
the
of.
spring market going to start?
You know what? I think it has started in parts. So the spring market has started that last week, though, with the weather. Definitely saw a little bit of a slowdown in activity, just because it was hard to get out of your door, let alone go look at homes. But the spring market it's trickling. It's trickling. Buyers are on the sidelines, but we are seeing some activity. The interesting thing is that inventory still remains low. We're just over 2,000 listings, so 2,030 listings.
All right, so in the fall we were at 4,000, weren't we?
Yes.
So did those fall off, or did those actually sell? What happened with those?
Some expiries,
Yeah.
some cancellations, some people who thought, well, I'm just going to take it off the market and then relist in the spring. With respect to seasonality, it's very, very difficult because we're not quite following a pattern yet. And so right now there's a scarcity of buyers. And so the inventory, although low, there is a lot of choice for buyers. So it's an interesting time for sure.
Are buyers getting accustomed to these rates now? Do they have to come down before we get a surge, or are they just going to go, you know what, it is what it is, let's just do it?
Well, it's a good question. I mean, Bank of Canada did their, we hope, last increase this past week, and we hope, as much as he mentioned, now he's probably going to pause. He also said a little over a year ago that
Yeah, but
rates
their
would remain.
forecast for inflation is better.
Because it's year-over-year
We're down
numbers.
from the peak, yeah, but
But it's year-over-year numbers,
right.
right?
But they're
So
saying
inflation
3%
numbers
this year and 2%
yeah.
next year.
Yeah, because it's year-over-year numbers. So, inflation numbers, we really started to see them escalate last February. So now that we start comparing year-over-year, we should start to see our inflation numbers get down into the 3s and 4s at some point in the next couple of months.
And we should
diesel
be
prices.
seeing some of the results from these interest rates too now kick in. It usually takes about 6 months, right?
Well, again, it's a lagging indicator in many cases. So, the interesting part is that the bond market, really came down on Wednesday and then kind of got back to where it was before the Bank of Canada announcement. So we're back on even par from last week, but it's a good indicator of what is likely going to happen. And when you see the bond market start to dwindle down, that's a good indicator of the likelihood of prime rate also starting to come down, but it's always 6 to 9 months in arrears. So
you think we're stuck at this prime rate for 6 to 9 months?
Yeah, I do. Unless a recession numbers come in and it hits us harder, I believe that Tiff Macklem now is going to pause. And when he says pause, he means pause for probably at least 6 months. So by the time we hit the fall, he might be in a position to start lowering prime rate. But it's only if the numbers warrant it, because if they don't warrant it, then he'll leave it the way it is, because he doesn't want to bring them down just to bring them back up. So I think his goal is to leave them the way they are, which, from a mortgage standpoint, is going to drive more people to fixed rate mortgages instead of variable rate mortgages, because that spread keeps widening now, which sounds crazy, but keeps widening, where the fixed is better, way better than the variable. And I can't remember saying that.
If these rates come down and you have to get out of your mortgage, you are in trouble.
You are, from a standpoint of, if you're with a major bank, again, the major banks still have posted rates. Now, the gap between the rates they're giving you and the posted rates is smaller than it was 6 months ago and a year ago, but there's still a gap there. And what happens is they use that gap to charge the penalty. So if you go with a non-bank lender, then it's rate to rate. But still, at that point, you got to pay the interest rate differential. So is it worth it to go from a 4? Right now we can get 4.59 and if rates come down to 3.59 and you've got 4 years left on it, is it worth it to play that 1% interest for the 4 years just to get the lower rate, because you're really paying it up front? So if you are taking a fixed rate mortgage, you just got to accept the fact that you're going to be in it likely for the 5-year period, because it'll be too expensive to get out of it.
It'll be huge money to get out of it.
Well, it'll be huge, but if it's with a non-bank lender, it's the interest rate differential. So if the interest rate differential is 1% and you got a $400,000 mortgage, then it's $4,000 a year. Not so bad. It's not awful. As opposed to if the interest rate differential is with a big bank and the big bank's posted rate is 6.5%, and all of a sudden you're paying a 2.5% premium per year, then that becomes expensive. Then that's $10,000 a year each year for the remaining years, and if you got 4 years left on it, that's $40,000. So that's a big difference. But again, at the end of the day, right now, I think it's a tough decision for people to make when it comes to choosing whether to go with the variable, because the variable might be the smart choice. A little bit of risk associated with it from the standpoint that you're paying a premium in the initial 4, 5, 6 months. But if you believe that a recession is going to hit us and bond markets believe that that's going to happen and they're going to start to lower the bond markets, which means the fixed rates will come down, then you'll be able to convert it to a fixed at some point and save yourself money for the long term. But there's short-term sacrifice.
You're not going to convert later, are you?
Oh, sure.
I wouldn't.
Well, again, you could say that, but if prime rate has no chance of coming down and we're starting at 6.7 today, so the bank's prime rate is 6.7, you're starting at that, and even if you got prime -1, which not many banks are giving, but let's say you got prime -1, so now you're at 5.7. If all of a sudden you're at 5.7 and the banks or the lenders start posting a 5-year fixed at 3.89, that's a 2% hit. Mm-hmm. And for some people, they're going to look at it and they're going to say, well, I think the prime rate's going to come down, but how long is it going to take for prime rate to come down 2 points?
I think that's it, right? Where is the delta?
Trying to time it.
Yeah, you're trying to time, just like
But
you're
it's
trying
hard.
to time purchasing at the right
Yep.
time. You're trying to time your mortgage, and it just comes down to your risk, reward, and sort of your
tolerance as well,
That's
your
right.
risk tolerance,
That's
and
right.
for some people, they believe, and some banks are still calling people and telling them that rates are going to continue to go up, even though everybody higher up in their organization says otherwise. Somehow at the branch level, they're telling customers, but it's a sales tactic.
I was just going to say,
of
you
course
get
it is.
compensated for how many mortgages you lock in.
Of course
right?
it is, and they want to retain the business, and they don't want the business going elsewhere. And there's some banks that are just not priced well right now. They're looking at bottom line for them. They're looking to increase their bottom line because they realize the volumes are going to be a little lower this year. So they've got elevated rates, and
they want a bigger piece.
And they know they're not getting business from the outside, which is the mortgage broker channel. So what they're doing is they're really going hard at their customers, and if they have to stretch the truth a little bit and make them believe that rates are going up, then they'll do that just to maintain that portfolio.
How top of mind are rates with your buyers?
Very top of mind. I think a lot of people that are on the sidelines right now are just waiting it out. And so if people are able to afford the rates right now, it is a very good time to get in the market, because we're sort of in this lull of where we were, in the frenzy activity we saw of 2020, 2021. We saw a very, very drastic decline in the volume of sales in 2022, and that was due to the higher interest rates. But right now we're sort of in this lull, in this quiet time before I think we see another, shift towards a seller's market.
But even though rates are higher than they were last year, prices are down. Are we close to even of what you could get last year for what you can get this year?
I think in terms of affordability,
Yeah.
well, I think that the rates outweigh the pace at which the prices have come down. And in addition to that, the cost of living is so much higher. And so if you are looking to purchase, not only do you have to think about, what you can afford, but it's what you want to afford, because you have to now pay extra for food, you have to pay extra for gas, you have to pay extra for all sorts of things. And yes, people are still able to save some money with hybrid work coming into play, but I think that outweighs it. So I think first-time home buyers, with the rates being where they are, I think not only do they need to come down a little bit, but I think they have to stay down a little bit in order to excite those people to come back into the market and give them the ability to purchase. There is a difference, and I think that's where sort of, the unknown comes in, is people who are downsizing, people who didn't want to take part in the frenzied activity of the multiple offers and everything else. Those people, if those people start coming into the market and using equity from one home to the next, we can see a lot more activity. And with the inventory, as Frank said, half of what it was in the fall, it's kind of a wild card right now.
Are you expecting a bit of an explosion over the next month?
I think so. I think that buyers are coming out of the woodwork, and not just, not necessarily first-time buyers, but people who are experienced purchasers. And I see it already, where there are homes that are selling in multiple offer.
All right, I'm looking forward to our next segment.
It's going to be great. You know what? It's some headlines, obviously, over the last couple of months on mortgage fraud, and happy to have a guest that's going to let us know what she's seeing from her end. And she's the president of First Canadian Title, so Daniela's going to join us soon.
Yeah, if you got to get a guest, you might as well go to the top, right?
Right to the top. It's the only way to do it.
Usually on this show, obviously.
Hey.
521 Talk 521-8255. We'll be right back. Welcome back to the show. Very nice to have a special guest with us to talk about all this, my goodness, all this mortgage fraud which we're hearing about. And we're hearing about more and more and more of it. And it's big chunks. It's not just mortgage fraud anymore. They want the entire deal. Joining us is President of First Canadian Title, Daniela De Tomaso. Daniela, first of all, before I say anything, let me just say, if I ever had to put together another resume for myself, I'm stealing yours.
Wow.
Is there title insurance for resumes? Boy, we're hearing a lot about this, and are we just hearing about it more often now? I mean, we got 30 or so cases in Toronto. Are we hearing about it more, or is it happening more often?
Types of fraud that we were seeing in years past, typically related to fraud for shelter. We had individuals that would falsify documents in order to qualify for a higher rate, but now we're actually seeing fraud by third parties, whether it's related to mortgage fraud or now what we've been talking about lately, an increase in the incidence of title fraud, where people are actually selling properties without any knowledge of the purchaser or the homeowner. And just to give you some high-level numbers, pre-2022, this type of fraud would have been relatively insignificant to FCT from an overall perspective. And we're seeing that incidence now in 2022 alone in the multi-million-dollar area. As a total percentage of our total claims, because title insurance covers so much more than just fraud, it still remains a low percentage of all of our claims. But the rapidly increasing rate with which we're seeing this is concerning from a consumer perspective.
But they're getting more sophisticated now, and now they're seeing the profit margin. They're going for the whole nut.
Well, absolutely. And it's funny you say that, because even within the last few weeks, we've seen an increase in these instances where, to an untrained eye, you will look at the identification and it will look legit. And the reality is most people aren't trained to detect. We don't have the resources readily available to be able to perform proper scans, whether it's with various ministries or third-party entities that specialize in this. But as a title company, that's all we do all day long. We have certified fraud examiners. Our job is really as much to prevent these types of frauds as to stand behind our insureds when they do happen. So, we don't want these frauds to happen. Obviously, we want to prevent as many claims from occurring as possible. So we really are that second set of eyes for lawyers, for realtors, for brokers, and obviously for consumers.
So what can consumers do to protect themselves? And there's some that have owned their homes for 20, 30 years. Are those the ones that are more susceptible, or is it somebody that's even bought a house 5 years ago? Are they also at risk?
I would say that what we're seeing is that everybody is at risk. And, we're finding that this happens often where there are homes that aren't occupied by the homeowner. So if you are a person who has a secondary property that you're not living in, we suggest making sure that you're even scanning the internet to see if there's listings for your property. As crazy as that sounds, we've seen instances where these properties are actually listed online. Have a friend, a relative drive by your home, make sure there's not a for sale sign on your property. Make sure that you're keeping your personal information close and that it's proprietary and you're not sharing it with anybody.
That goes for if you're renting a property too, especially, right?
Absolutely. And we've seen instances where renters are actually the ones that are perpetrating these types of frauds, particularly when it comes to mortgage fraud, because, they're living in the home.
That's right.
They have access to the information. They know who the owners are, and we're seeing that as well.
Is there a way to request like a title alert on a property to make sure that nobody's putting their nose in your business?
Yeah, there are ways that you can monitor your title and also monitor your credit bureau. So you could subscribe to services that allow you to get notified, and also check your credit bureau regularly to make sure that no one has been, pinging it for information. Those are all ways to do this. But again, what we're seeing is that normally these sales happen quickly. The properties are typically listed for under market value, so the sale happens fairly rapidly. And, the saddest thing is that the innocent purchaser of the property, if they don't have title insurance, they are effectively completely unprotected, which doesn't seem like that could be the real consequence of this, but sadly it is.
So what happened, Daniela? So I know there was one story that hit the news where a couple came home from Europe. I guess they went to Europe for 6 months or 9 months, and they came home and somebody was living in their home because they assumed that they bought it. The buyers said, we bought the house. And so what happens in that scenario?
So in that scenario, if the parties to the transaction are title insured, then it literally is a phone call to the title company to say, my home has been fraudulently sold, or if you're the purchaser, I purchased a home from a fraudster. And then the title company has what we call a duty to defend. So in addition to having to pay an insured out on any loss, we also have the obligation to step in and defend our insured. That means we effectively become the insured. We call the police. We deal with the fraud squad. We hire investigators. We pay any legal costs that are incurred in order to having to establish that you are the rightful owner. So we literally step in, we hold your hand, and we put title back in the name of the rightful owner. And if the purchaser was also insured, we would pay them out the value of what they paid for that home.
But without title insurance, you're looking at tens of thousands of dollars, right?
Well, it depends on how long the process takes, but it's certainly thousands of dollars. Also, just the anguish. Most people can't even imagine this is a possibility. So just trying to figure out, what do I do? And then again, if you're not title insured as the purchaser of these homes, you are literally out of luck.
So can someone buy title insurance after the fact? So maybe somebody who's got a house that's free and clear, or if they have a mortgage on it, they're also susceptible now. It used to be, I think fraudsters would look for somebody who's got a house free and clear and then put a mortgage on it fraudulently, where now we're starting to see that even if there's a mortgage on the property, it doesn't matter, they're selling it. They're still getting some equity out of it. I mean, they're not getting all the equity out of it, but...
You're absolutely right, Frank, and that's the most interesting thing. As someone who's on the inside of this, their modus operandi continually changes. So years ago, we saw a type of fraud. As soon as we start to identify certain flags and start to prevent a lot of these, because we prevent a lot of these from happening, they change their game. So we're constantly trying to stay ahead of them. But if you didn't have title insurance when you purchased a home, and many people who purchased homes, 10, 15 years ago may not have title insurance, because of the demand, we introduced what's called an existing homeowner's policy, and you can purchase that at any time during your ownership, and you would have this fraud coverage included in that.
And what's it cost? Is it based on the value of the home, or is it just a one-time fee?
It's based on the value of a home, but if you're buying an existing homeowner policy, as an example, the base premium is $200.
Wow.
And then it's $1 per thousand for as long as you own your home. So it's a one-time premium, and it just doesn't cover fraud. Like they're introducing, the vacant home tax in Ottawa in April, and if there's a lien on a property because the proper filing hasn't taken place, we would cover someone who purchases a home where there are outstanding liens, where there are survey issues. So even though we're talking about fraud right now, fraud is just one of over 30 coverages that someone who buys title insurance gets.
I was under the impression that just about every deal that closes today closes with title insurance. Am I wrong?
I'd like to say that you are right in certain geographies. So in Ontario, real estate lawyers see the value in the coverage and protecting their clients. And yes, most real estate deals in Ontario today close with title insurance. As we move outside of the province, that pickup rate varies depending on knowledge and awareness. But people who have owned their home, prior to 10 years may not have had that opportunity because title insurance is a pretty new concept here in Canada. And we can check if somebody wants to call us. We'll check to see if they do have title insurance already. And if they don't, we can talk to them about what some of the benefits are, and they can make a decision as to whether they want to buy it.
That was my next question. How do you know if you have it or not?
We can run a scan through our database and determine if you have title insurance through us.
And who would be able to do that? Where would people be able to get a hold of your company?
They can go on our website, which is fct.ca, and get all the information there. And they can just call one of our team members would be happy to walk them through the process and answer any questions they have.
Well, especially for seniors, right? There's a good chance they probably don't have title insurance if their mortgage is 20 years old or or their house is paid.
Lady yesterday, and it's raising a lot of awareness. And again, I want to clarify, this is not happening with, we're not seeing thousands of these.
Right.
When it happens, it is so impactful and meaningful. And from my perspective, if there's a way to protect people against this risk, I think it should be a viable option that's considered.
One-time insurance, I mean, it makes so much sense. You're talking about an average home, even in Ottawa, that's $600,000-700,000, and to spend a small amount just to have that coverage.
The peace of mind.
And just before we go, Daniela, does your website show exactly what title insurance covers?
It does. But again, we have a very skilled team there that is happy to speak to anybody who has any questions and walk them through whatever scenarios, what our coverages are, how this all works. That's what we're there to do, is to answer questions.
Well, much appreciated. We appreciate you coming on with us, taking the time, and I am stealing your resume.
No problem. My pleasure. Thank you so much for having me and for raising awareness. Thank you.
That's awesome.
Thank you,
Molto grazie, Daniela. Molto grazie.
Prego, niente.
Yeah, too Irish again. 521-TALK, 521-8255. We will be right back. Right about now, most of our listeners are going, do we have title insurance?
That's right. That's right.
Most people don't even know where their mortgage is, but I guarantee you today they're going to make sure they got title insurance.
Check.
Well,
For sure.
Again, I mean, I think that most lawyers in Ottawa have done a really good job with title insurance. They explain it to clients, and they know the value of it. And like Daniela said, I haven't seen any fraudulent cases. Most of them are in the GTA. The ones that have been reported are in the GTA. I meant to ask her that. But
smaller fraud, are you seeing any of that? People lying now on their mortgage application?
Well, we still see that, unfortunately.
Stretching income.
But again, like Daniela said, I mean, that's fraud to have shelter. So they're not, they're going to make their payments. They're going to do everything. They just want to qualify. If they can afford it,
It's still fraud, though.
It's still fraud, but again, I mean, they're not stealing money from anyone, where in this case you've got people that are stealing, and I can't even imagine. Can you imagine going to Europe for 6 months?
Vacation? Oh,
coming
my
home and
gosh.
the key doesn't work, and you knock and somebody answers and says, "What are you talking about? This is my house. I just bought it."
Can you imagine being the purchaser?
Well,
and having
and
somebody
finding
knock
out.
on the door and go, "This is my house. What are you doing?"
Well, but you
Yeah.
wouldn't know who was duping who, right?
Yeah.
Like if you're the purchaser, you're thinking that somebody is fraudulently telling you that they own the house, and it's a
And these
messy,
fraudsters
messy
have got
thing.
like fake passports. They're scanning fake passports to show. I mean, you really have to do your due diligence.
It's no different than the fraud for shelter that, I think happens a lot more in the GTA. There's more opportunity in the GTA to do it, and the numbers are bigger in the GTA, when you're committing fraud. But, at the end of the day, I mean, some of the clients and some of the lenders have told me they get notice of assessments and tax returns that look absolutely legit. Yeah. But they're
fraudulent.
They're
yeah.
totally fraud, but they look legit. They do everything to make it look like it's authentic. But again, this is where the government's trying to come out with the open banking, and there's people that resist on the open banking aspect. But the open banking will allow the lenders to be able to have access to bank accounts and verify deposits and verify paychecks going in, payroll going in, so that they try to eliminate the fraud, and they present it that way. But there's a number of Canadians, and I think myself included, I don't want open banking. Like, I want to be able to give you information if I have to, but I don't want you to have access to it whenever you want.
Yeah,
so
I agree with that.
Yeah, so that's why they're struggling getting it across the finish line. Some countries have adapted the open banking. I think, there's got to be a fix. There's got to be a compromise somewhere where open banking is used for certain things and has a deadline to it where, you got 24 hours to look at somebody's activity if you want to look at bank activity. But even though, and because they get access to the actual banks, they're not relying on statements that are fraudulent, and it's too easy to prepare fraudulent statements these days. So
now, where's the responsibility with real estate agents and homeowners these days? I mean, you can only do so much. You go to somebody's house, you assume they own it, right?
Well, I mean, we have to verify ID, and we have to verify that looking at the ID, and there are certain markers on ID that will let you know whether it's legitimate or not. But if it's a good fraudulent document, I don't have the skill set to.
These people have gone past
That's right.
Real estate agents, lawyers,
That's right.
2 sets of lawyers.
That's right. So the lawyers, I mean, there are different websites and there are things that we can do, but really the onus, I think, comes down to the lawyers. We have to do our due diligence. Absolutely, you have to verify that the people who are selling the house are who they are. But if they have a whole conglomerate of paperwork, as Frank is saying, and they've got fake documentation and fake passports, I don't know that the average realtor is going to have the skill set to identify
I wouldn't leave it just to the.
Well, never mind a realtor. Lawyers will tell you the same thing. Like, we're educated. I mean, we look for certain things.
And bankers.
Right.
Yes,
So we're looking for certain things, but again, we're not experts. Ideally, again, part of the open banking would be open where someone can type in the driver's license number. If somebody gave me a driver's license, if there was a website we can go to, type in the driver's license number, and it would pop up with the actual picture on the ministry, because what they're doing is they're taking that driver's license, putting their own picture
photo
on it.
That's right.
So this way, at least we can have that. But again, privacy issues is preventing some of that stuff from happening moving forward. And that's why we see the frauds. Well, that's just it, right? So at what point are we invading someone's privacy?
Now, you look back 5-10 years ago. How many more questions are asked by banks today compared to
Oh, my Lord. There is no such thing as a straightforward deal. I used to be able to send it in, and my notes, honestly, to an underwriting, to the underwriter would be slam dunk, wish they were all this easy. Can never put that anywhere now, because even if you send in a file where it's an existing bank customer, you send them the statements, they still come back with these obscure questions just to verify that it's that person. So
I had a client who had a down payment coming with a gift letter from a parent, and then the bank wanted to verify that the parent had the money. And then, so how far back does one go?
90 days. So they want 90 days bank statements from the giftor, because they want to make sure that the giftor
That's right.
isn't laundering any money.
That's
right. And it goes down from there.
Is there really in mortgages?
0.1%, because most people that are laundering money don't need a mortgage.
That's right.
They just don't need a mortgage. So when somebody's putting, to me, I always say, if somebody's buying a $500,000 home and they're putting $25,000 down payment, you really think they're laundering $25,000?
It's a lot of effort for $25,000.
It really is, and they're buying a house where the mortgage, by the time you put the default insurance in there and pay all the other fees, it's costing you $500,000 and you're borrowing $500,000. It really, it's just absurd. But again, they don't want to discriminate. They don't want to, so it's carte blanche across for everybody. The same rules are for everybody, regardless of whether it's 5% down or whether it's 50% down.
Yeah, don't like it.
So, don't like it either. And Paul, I guess, didn't get stranded. He's not on the SS Minnow because somehow he texted me and said that he was listening to the show.
Oh, hi, Paul.
Oh, God.
Yeah. Did you see where he's listening to the show from?
What, some boat? The SS Minnow. It's the SS Minnow. It just hasn't, the storm hasn't hit yet. He might not be here next week.
No, it's actually, I look closer, it's the Rushforth Minnow.
Yeah. And what I can guarantee is if he is here next week, he probably isn't buying breakfast, so.
Oh, there you go.
All right, back to our current market. What are we doing? It's end of January. When are we listing? Are we waiting until later in February, early in March, or is the market, do you anticipate, going to go a little crazy over the next few months?
Definitely a sense of optimism among buyers today. Inflation is coming off of its peak. The one thing that I will say, which I thought was very, very interesting, last week there are 2,030 units for sale. Last week, in the last 7 days, 117 sales, which doesn't seem like very many at all, but the market is picking up. 44 of the residential properties that sold, so more than 50% of the residential properties that sold under $650,000.
Under 650?
Under 650.
Wow. Under
So-
650, but over asking or about near asking?
About near asking. And I think that's the really important thing right now is if the inventory continues the way it is and the scarcity of buyers continues the way it is, we're pretty much in a balanced market. So at 4 months, we're in a balanced market, and it does feel like we're there in certain pockets. And the thing to understand is in Ottawa, neighborhoods don't perform in a vacuum. And I think that that's where working with someone who knows the city, who can work across the whole city and can talk to you about the different nuances of each individual neighborhood and how they work together. Because every part of the city is going to work together. That's
Are some
definitely
neighborhoods doing better than others?
some neighborhoods always do a little bit better than others.
And
And
what about snack bracket? Are we looking at, $600,000, $500,000 condos, $900,000 homes?
I think with the way the pricing has come down throughout the city, I think really we're seeing a more conservative market. The larger homes are selling. There are a lot of people who were in the larger homes that didn't sell for the last few years and who are now looking to list those homes. Snack bracket really in and around the 700,000 is very, very good. But with the number of the inventory that is out there, I think listing now in order to transact before the summer, very, very good time to do it.
Yeah, that's what I'm wondering, because if you wait, then you're going to have more competition.
You're going to have more competition and the days on market is longer. So if you want to transact, and if you sort of think the average close is 30, 90 days, you're working backwards. If you want to move by the summer, working backwards, if it takes you a month to sell your house now's the time to do it. And the thing to remember is that there is choice for buyers. So if you are thinking of selling before the spring, if you're thinking of selling before the fall, start getting your house ready. Have us in. Do the things that you can do. Get your house cleaned, get your house organized, make it feel very fresh and airy, because with buyers being able to pick and choose and have the luxury of time. A year ago, if you had 15 minutes in a house, you were lucky. And then at that point, you had to make a decision. Right now, you can go see a house. You can take a week, perhaps. You can go see it again, and you can really think. So that's where the homes that are shining are really, really, really...
So yeah, a year and a half ago, you could put anything on the market.
You could put anything on the
Now
market.
it's got to show.
It really has to show. We can't change the location of your home. Please make sure that your house is priced appropriately, because if you're pricing it too high, you're going to miss some of that market. And if you're pricing it too low, people are afraid to price it too low. But truly, you can't really underprice a house in this market because people are still used to paying for a quality item. Get it ready, and I think now is a really, really good time to start thinking about putting it up the next week or two.
You
Dora.
And you
Yes,
better
sir.
get pre-approved.
Would a house that would have sold maybe a year ago for $930 today sell for $750? Is it that big of a gap that it's come down? And only because I see these mortgage brokers, most of them are from Toronto, and they post, while a year ago you would have paid $930 with a 5% down payment, and with the interest rates where they were a year ago, here's what your monthly payment is. Today you're going to buy that same house for $750. And even though the interest rate's higher, your monthly payment is virtually the same because you put less of a down payment because it's $750 instead of $930. But your monthly payment is virtually the same, despite the fact that the interest rates have gone up as much as they have. Is that and I look at that, I say that's got to be Toronto, because that's $180,000 is a big gap.
It does happen here.
It
now,
does, okay.
not with that same frequency, but if I'm thinking of a specific neighborhood, there was a home that was listed last year, 4-bedroom home, the exact same model, sold at $1 million last year and sold at $760,000
Wow.
this year.
Yeah, that's
so
big.
there is a big big drop. So some neighborhoods, the spike at which the prices increased went up a lot faster in some areas of Ottawa. They've come down, and they've come down still higher than where we were when we started, but some of them have come down with a bit more
Would it be safe to
of a
say the
slope.
higher the value a year ago, the more of a gap now?
We're going to start to see negative
I think
numbers,
we're going
right?
to see negative
For the
numbers,
next 4
and I
months.
think right now, because Ottawa has grown so quickly, there's a lot of new construction, a lot of newer houses, and the people who are looking to buy, I think sometimes prefer to have a home where they don't have to invest a lot of capital and do a lot of renovations. So sometimes the higher price homes are keeping their value, and the ones that need a little bit work, we're seeing come down in price a little bit more quickly.
521 Talk, 521-8255, back with our final January segment. Welcome back. Dora's here for Paul. Frank's
Hello,
here for
hello.
Frank.
You know, if I'm away, I don't listen to the show. Like, I'm enjoying my family and my
He
friends
has
and the
no
sun.
friends. Paul has no
Clearly, he has no life because he's texting us.
You know, if I'm on a boat in the Virgin Islands, the first thing I'm doing is listening
to
open house, the
CFRA?
real estate and mortgage.
Yep.
show.
Absolutely.
That's what I'm thinking, too. Yep.
Hey, let's talk
just-
about guarantors. We haven't talked about guarantors for a while, and I'm guessing with rates the way they are right now, people are going to need a little help from their parents if it's possible.
First-time home buyers have been on the sidelines. I think probably Dora can vouch for it
Yes.
based on the real estate
Yeah.
sales. You know, you're not seeing them, as often as we did over the last 2 years, and they
No.
took advantage of the low interest rates and the fact that they can get into the market. But even then, we were seeing parents as guarantors. Now it's even more important because as the interest rates are elevated, it's that much tougher to qualify. And in some cases, and listen, a lot of these first-time home buyers can afford the house itself. So
Yes.
if they did their budget, they can afford the payment. Even with the elevated interest rates, they're comfortable with it. It's just that you have to qualify at 2% above your contract rate. So even today, that we're close to 4.5% now for a 5-year fix. If someone were to take a 5-year fix, so the crazy part now is we used to use variable to qualify them. We can't use variable anymore. Now that prime rate is where it's at, they have to qualify at 8.5%,
That's
which is
insane.
That's
insane.
so high.
It's insane. Where on a fix they can qualify at 6.5%. So all of a sudden you're almost forcing them to take that 5-year fix to qualify, unless they get their parents in as guarantors, where they can take the variable if they feel that interest rates are coming down. But guarantor is a really good program, and the banks don't advertise it because they don't like the guarantor program. They like the cosigner program. So as a cosigner, a parent and or parents, and I've had scenarios where it's a couple and one parent from each is going on to help them
Yes,
qualify. So as a cosigner, that parent or parents co-own the house with them, and they're on the mortgage so that it restricts them from being able to qualify for, in other words, it counts against them as a debt.
Mm-hmm.
So, and there's no investment income coming from it because their kids are living in it. So it's a pure debt for them.
It'll
But-
show us the same debt on both then, right?
Same,
Yes.
yes, on all parties,
Yeah, yeah.
anybody that's
Yeah.
in. As a guarantor, it doesn't show up on credit bureaus. It doesn't show up on title. You're not on title on the property. It's basically an agreement with the lender that if the mortgage were to go into arrears, the guarantor, they would like to see the guarantor step in and bring the mortgage up to date and make sure that it continues to stay up to date. If the guarantor, and again, there's going to be circumstances where maybe, they get in a fight and they don't like each other anymore. And, if the parent says, I don't think so, I'm not involved, the parent needs to understand that they're still obligated potentially. But what happens is, obviously, if the payment gets to 90 days in arrears, now the bank and their lender is going to take legal action. And if there's a loss at the end of the sale, that's where the guarantor could be on the hook. So, again, if the
But
equity
legal
is
action
there,
wouldn't
it's
come
fine.
against the guarantor.
Well, it would come against all parties. The guarantor is signed, so the legal action would come against the guarantor in that scenario.
But it's a fantastic program.
It
And
really
It's
is,
a
because
fantastic program, and I
Most
wish more
parents,
people.
don't want to be on title.
That's right.
They
Most
have
people don't
no
want to be on
interest in
title,
being
but
on
yet want to help their children.
Yes.
And so if you're working with someone who knows about this, if you're working with someone like Frank who can offer you this, absolutely, it's the way to go if you need help.
And it doesn't have to be a huge chunk of money, does it? Maybe
Well-
just enough to get you over the edge.
Again, so we're also seeing a lot of living inheritances happening
Yes.
ahead of time. So where parents are, they're saving the money for when they pass away to give to their kids, but in some cases they're saying we want to give. In this scenario, not every parent wants to actually give the cash away, so this is an opportunity for the parent to help the kids move out of their basement or move out of their home and help them get into a house of their own without actually having to give any cash, unless the kid doesn't even have any down payment. Then they may have to help with the 5% down.
But then you have a vacant kitchen in your basement. What
Right.
happens?
Well, if you're Italian, listen. If you're Italian, every single Italian will call in and tell you both kitchens are used, no matter if there's one person in the house.
I'm not
or
Italian,
5
and I
people
wish
in
I
the
had a
house.
second kitchen.
But
And do you have to be related to be a guarantor?
yes, it has to be immediate family. So it's very, very specific on the guarantor who could be. It has to be mother, father, grandmother, grandfather, brother, sister, and that's it. There's no outside of that.
So when are you adopting me?
We talked about real estate and stuff, and builders out there too are struggling a little bit. And I've
Yes.
certainly had some conversations with builders where, somebody may have bought a house 16 months ago and now it's almost ready, and all of a sudden their bank is advising them that they don't qualify anymore. Now, again, from our understanding, we don't do a lot of builder deals because we don't have lenders that give us, 2-year rate holds, where some of the banks will give 2-year rate holds. From our understanding, the lenders we work with, if we get a pre-approval from our lender, then unless there's some change from a standpoint of the price changing and they need more money, once we get the default insurer approval,
Yes.
then that client is approved regardless of what the interest rate is. So, because it's at the time of the contract signing.
Yeah.
But some banks, unfortunately, didn't send the file to the default insurer, and now all of a sudden they're doing it now that the house is almost ready.
Yes.
late.
Yeah.
And now it's too late because now the default insurer is saying you have to use today's rates now, because it doesn't matter that they bought the house in January of 2021.
Yeah.
Because you're sending us the file now, we got to use today's qualifying rate, and some
And
clients don't qualify, which is
Don't
causing a
qualify
big
at all.
big problem for
That's right.
builders, because here they're anticipating clients are ready to move in. They've done everything, built the house for them. And once they're notifying the client and saying, hey, okay, your house is 90 days away from being ready, the client's writing back and saying, yeah, we can't afford it now. Our
Yeah.
bank won't approve us. So, get second opinions for sure. I truly, truly believe that even though if you're buying from a builder, and I've said it for a long time, if you're buying from a builder, the banks can give you a 2-year rate hold, which is awesome. And if you got one 2 years ago, it's fantastic.
Yes, imagine.
Yeah, it's fantastic, right? But at the very least, make sure that they've sent the file to the default insurer and you get a default insurer number. If they haven't done that, if you're buying with less than 20% down, if they haven't done that, then go to a broker and get at least a mortgage approval. Even though the rate's not held, get a mortgage approval with the default insurer number on there.
Birthdays?
Just a few. I've got obviously my son celebrating his birthday tomorrow, 28. My little guy is 28 years old. It is crazy to think how my little boy's already turned 28. But Karen and Victoria celebrating their birthday as well. So happy birthday to them.
Dora?
Nothing for me.
How do we get a hold of you?
Dora at paulrushforth.com.
Frank N. at mortgagebrokersottawa.com. And thanks again to Daniela Di Tommaso,
Oh, yeah, that was
president of
terrific.
First Canadian Title. If you want to check and learn about title insurance, it's fct.ca.
And again, support local businesses and charities. And unfortunately, Paul will be back next week. So thank you, Dora, for filling in for 2 weeks.
Thank you, Dora. And
Thanks very much,
with
you guys.
Paul coming back, don't worry, you don't have to listen.
Take care.